Welcome back to Newsday. It's time now for business news. European markets were in retreat this morning after U.S. Federal Reserve Chair Jerome Powell said the central bank is not confident that it has done enough to rein in inflation. Asian equities also fell, mirroring moves on Wall Street as market optimism over U.S. Federal Reserve's loosening of monetary policy appeared to have fizzled out. In the U.S., futures were mixed ahead of open as markets digest Federal Reserve Chairman Jerome Powell's hawkish remarks late yesterday. Ahead of the weekend, the University of Michigan will release the preliminary Consumer Sentiment Index data for November.
Arise business analyst Bode Ososami is here to shed more insights on the markets. Thank you for joining in with us, Bode. What did Powell say to make markets so nervous? We've had those remarks before, have we not?
Yes, indeed, Hawa. Thank you for having me on the show. I'm looking at Asian markets. They all closed in the red. Asia Composite down 0.47%. They closed in the red. Hang Seng also closed in the red 1.76%. Nikkei also down 0.24%. FTSE is also down 1.36%. DAX down 0.66%. CAC down 0.93%. You can see all the major Asian indices closed in the red. FTSE also, all the key indices are all in the red. But if you look at US indices, although about an hour or so ago they were looking a bit mixed, I would say they are still somewhat flat. S&P 500 is up 0.33%. Dow is also up 0.37%. It seems Powell was able to kill an 8-day stock rally simply by sowing doubts into the narrative on rate increases. He didn't actually change his position, nor did he commit to more interest rate increases or hikes, but he emphasized that he wasn't ruling further hikes out. Also, after his comments, the probability of a December pause actually rose to 91% from 85%. But also, we did see an uptick in the 10-year treasury yield to around 4.6% today, after falling as low as 4.5% earlier in the week. Higher bond yields have consistently implied lower demand for stocks, so that also is expected to weigh on prices. I think markets are reading his choice on emphasis to mean he sees markets making premature positions in their trading decisions, which they need to adjust for. And I think that is what they have done. So we are seeing what I think is a mixed to flat picture. Also, Richmond Fed President Thomas Barkin, he also recently said that despite real progress on inflation, he isn't yet convinced on a smooth path down to 2%, adding that the Fed is walking a fine line between doing too much and doing too little. That means it can easily get it wrong. In that kind of context, they are most likely going to do a bit too much. Chicago Fed President Austin Goolsbee, he also said the Fed needs to watch longer-term bond yields, adding that the path toward the 2% target is increasingly feasible if external economic shocks aren't bigger than expected. Fed Governor Michelle Bowman said she supported not raising the Fed funds rate at the November meeting, but is open to do so at a future time. So we will see what the numbers look like. The next policy meeting is still far, December 12 to 13. Although we do get some more data today, University of Michigan preliminary Consumer Sentiment Index comes out. That's the November preliminary index. It's expected to come out stable. Still looking at U.S. markets, it's still looking pretty much on this fairly positive side. I would say just flat. S&P 500 up 0.25%. The other indices to just barely positive. But December 12 to 13 is still a long time away, given that a lot can change in just a week, talk less a month.
Arise business analyst Bode Ososami, thank you so much for joining us on Newsday.